Hey guys, welcome back to another episode of Markets by 1% Club, where we deep dive into stock market investing. On today's episode, we'll be analyzing the Swiggy IPO. We'll be talking about the IPO details. We'll be comparing the financials of Swiggy with its competitor, Zomato. We'll also be talking about how Zomato became profitable, how it had fared since its IPO. And finally, we're going to talk about should you invest in the Swiggy IPO? How can you do it even before the IPO, and a lot more things. So we have Shashank Udupa with us. Shashank is coming on the channel for the second time after the huge success that we had in our maiden episode. Shashank, thank you so much for agreeing to do this again.
Awesome. Very excited to do the Swiggy versus Zomato IPO game. You know, there's a very fun fact. Swiggy at one point was more in revenue as compared to Zomato. So they had a higher revenue than Zomato at one point. And I think, as you said, before we were discussing about this, that Swiggy is very popular in the southern belt, whereas Zomato is very popular in the northern belt.
Yeah.
Right. And if you look at the revenue numbers right now, it's almost the same. There's a 1,000 crore difference between Swiggy, which is at 11,247 crore, and Zomato's at 12,000. But the huge difference here is the net profit.
Yeah.
The net profit is minus 2,300 crores, and Zomato's at plus 351 crores.
That shocked the entire country, right?
That is what is very shocking, right? But again, very weird is that Zomato, when it came out with their IPO in the past, they were also not positive. They were negative, right? Even they were losing a lot of money at that point. Eventually, when you come into the public market, people are very brutal. So if you don't show profits quarter on quarter, we will not like you, right? So then I think at that point Zomato said that let's do this, let's get profitable. So but they have a road to do it. That if that road is carved by Zomato, then there's nothing stopping Swiggy from following the same path. And if you look at, I want to highlight this AOV, okay, which is called average order value. So like when you go on Swiggy and Zomato, you order, right? If you order expensive things, your average order value is high. If you order cheaper things, smaller things, it's lower. So here the average order value of every person is around 428, which is pretty similar in the food delivery business for Swiggy and Zomato.
Oh, it's the same for both?
It's the same for both.
Okay.
So even though you're operating at same AOV, that means the orders are obviously different. And as you can see in the next one, the monthly transacting users, the number of people ordering, on Zomato it's more and on Swiggy it's slightly less. There's a gap of approximately 6 million orders, right? But again, even though the revenues are same, the net profit is vastly different. That is something that they will definitely have to work on. With respect to the cities, everything is very similar.
Got it. Now let us look at the big daddy
biggest
in current India, which is the quick commerce business, right? And we are fast seeing that commerce is moving towards quick commerce. Everybody wants 10-minute delivery, not just for food, but also for electronic gadgets, rice and all of that stuff, right? So both Swiggy and Zomato have their quick commerce business. Of course, there is Zepto which started it, but very quickly Swiggy and Zomato started their own thing. Swiggy started Instamart. Zomato actually acquired Blinkit.
Quick commerce is something that nobody predicted would fly the way it's flying right now. It's basically like mini Amazon. Like Amazon started Prime Day with 1 day delivery, and we realized 1 day is so fast, and now we're like 10 minutes. If it doesn't come, dude, I'm not happy, right?
And the shocking thing is it only worked in India. Like India. In US and all, no quick commerce. It doesn't work. Only in India it's working.
I don't know why, but I think it's something that the customers didn't know they wanted and they've got it. But now I can't live without it. It's become very weird, right?
So let's talk about those numbers.
So if you look at Swiggy and Blinkit, now this is one place where I have to give little kudos to Zomato or Blinkit, right? Because they were not the first movers, right? They acquired a company and they got a lot of hate for acquiring it, and then they turned it around, and now they have the highest market share in the business as well. And this is mainly
more than
because
Zepto.
More than Zepto. And this is mainly because Zepto does not have a food delivery infrastructure. That is the, again, advantage that Swiggy and Blinkit have, that they're into food delivery. They have so many users transacting. This is a byproduct of that thing. Whereas Zepto is only into food, into this, right? Which is quick commerce. So that is a disadvantage. So you can see the revenue difference is massive here. As of FY24, Blinkit is at 2,300 and Swiggy is at 1,100. So that means the adoption on Blinkit is more.
So that's crores.
That's in crores, yes.
So
the
Blinkit
adoption
is double of Swiggy Instamart.
Yes, yes. And you can see that advantage coming in, right? And if you look at the gross order value, which is the total number of transactions that happening, 1 billion to 1.6 billion. And the biggest difference is in the AOV. The biggest difference here, because Swiggy, people are going and buying cheaper stuff, and Blinkit, they're buying slightly higher ticket prices. And this can also be slightly skewed because Blinkit has been experimenting with iPhone deliveries, PS5 deliveries, whereas Swiggy has not done those collaborations yet. But they're moving fast, right? Eventually, it'll all come to the same AOV. But this, for me, is an opportunity.
Correct.
Swiggy can reach 614 AOV, which means
Right.
profitability goes up.
Right. If you look at the food delivery business, Swiggy versus Zomato, they are all in 600 cities.
Correct.
600 plus cities. But the quick commerce is only in 25 cities.
Yeah.
So there is huge market share yet to be captured in all of
Yes.
these other cities. So the game has just begun.
Because they're all in tier 1 right now. We are used to it. We use our phones.
Right.
You've not entered tier 2, tier 3 deeply, right? When that deep penetration happens, and why not? Because if Swiggy, Zomato are working there, this will also work there.
Correct.
And
Of
maybe
course.
the AOV will be lesser,
Yeah.
but it will definitely bring profitability that
Of
comes
course.
in.
Of course. Because the infrastructure is already set over there.
Exactly.
So might as well do this on top of it.
Superb.
Cool. Now let's talk about what did Zomato IPO look like. I remember when it came out, it was a loss-making company.
It was.
And for Indians, the first thing is if it's loss-making, why should I invest?
Yeah.
So can you talk about what happened since the Zomato IPO?
So when Zomato came out, it was obviously a big hype, right? Because Zomato is a well-known name, right? And obviously people at that point were only investing for listing gains. We just want to buy and invest.
Yeah.
So they came out with a 60,000 crore market cap, which now increased to 1 lakh, as the share price increased to 2x, 76 rupees they became 144 just on listing day gains, which everyone was happy.
So in one day it doubled.
Yes, it just doubled because in the 1-2 days, like preceding, I think 2-3 days, it went up, and then people started booking profit, started falling down. Then the next quarter results came. It was bad. It was negative. It fell down even more.
Okay.
And from 140, I think it went all the way down to 50s. I think it was 55, 60 at one point.
Oh.
And it fell that low because consistently, I think 4, 5, 6 quarters were negative. And then that realization hit. Okay, we want a fundamentally good company, not a loss-making company, right?
Right.
And then the turnaround happened at that point. And as you can see, the company was never profitable at that point. They didn't have a lot of money in the bank as well, so they had to go IPO. And the whole euphoria died down after a point.
Right.
But if you see the euphoria, definitely there was there. The retail investors over-invested, HNI category, everyone over-invested. And I think we will see something very similar with Swiggy also.
Share price of a company.
Yeah.
It is more dependent on the perception of people of that company. It is not just dependent on the actual financials.
Yeah.
And now because Swiggy and Zomato are like such household names,
Yeah.
everybody is like, I want to put money because I've heard of it.
Yeah.
There's automatic trust in that.
But you don't know whether you're investing at the right amount or not.
Correct.
So that is the biggest problem.
Because eventually it comes down to the financials, but at momentary points of time, it depends on the perception.
Yes.
And right now the perception is quite high, I would say.
It is. Even for Swiggy, it's quite high.
So let's talk about this, right? What
is
is happening
interesting.
now with Zomato? Like, because now Zomato is on the news almost every other day.
Yeah. Yeah.
What is happening?
So
How the hell did they...
So I think couple of changes, right? If I had to quickly highlight, see the start when it came out of the IPO. See how it fell from the top, right? It fell from almost 150 to, as I said, around 50s. It went down by almost 73%, and at this point, most of the retail investors exited.
Basically,
right?
if I had 10 lakhs in Zomato, it would have come down to 3 lakhs.
It would have come down to almost 3 lakhs. Yes, it would have come down heavy, and you would have obviously been very scared about it. And then it didn't move again for almost from August to May. It had never moved, and I still remember around May is when I think Dipinder came out and said that next quarter we're going to be profitable.
Yeah.
Right? I think he took it as a challenge because at that point in the news, everyone was abusing them, saying it is falling, you invested, see now the loss and all of that.
Yeah.
He said, I'll become profitable. And it started with very thin profitability.
I think 2 crores profit
2 crores profit.
for that quarter.
But that was an eye-opener for people because never we thought that food delivery business would ever be profitable. And this was the same time he had a Blinkit acquisition as well.
Right.
So after that, rest is history because then they turned around, Blinkit started doing well, food delivery started doing well, he became profitable and he consistently repeated that process, which we'll understand a little bit more in detail.
So, can you talk about this? How Zomato became profitable like quarter on quarter? Like what is happening here? Look at this quarterly results.
So, if you see the profitability from June 2021 to March 2023, they were widely in loss, right? Even at March 2023, they were at minus 188. And then you see that their operating margin started becoming better. So, in the next quarter from March to June, their operating margin went from minus 11 to minus 2. So, that means they started optimizing it, either use technology, reduce their employee staff and started optimizing it that way. So their margins slowly became minus 2 to plus 2.
Okay, that is basically profit divided by sales.
The profit divided by sales, yes. Profit divided by total sales. Basically sales and all the expenses I'm incurring for that sales, like my employee cost, office cost, this and that.
Got it.
So that started becoming more optimized. So that became much better. And other income started increasing as well, right? Now other income usually comes in multiple different sources, which we will see in the next slide as well, right? Okay. But they slowly started becoming profitable because of these few factors. Revenue growth, margin expansion, and new product which actually gave a huge boost. So these things we will look at.
So no wonder Dipinder has become a celebrity now with this kind of
It was very difficult. See, if I had looked at this and minus 300 crores and then suddenly you're giving me 2 crore profit after 2-3 quarters, I would be definitely shocked at that point, right?
Yeah.
So whatever said and done, he did something amazing.
So let's do deep dive into the current financials of Zomato.
Yeah.
Like what are we seeing over here?
So this is the quarter-on-quarter Zomato result. Now, why are we looking at Zomato, right? Because this becomes a benchmark for us when we think about Swiggy IPO.
There's no other competitor.
There's no other competition.
Yeah.
So I am trying to analyze why did they become so famous? Why did they do well? And what is the scope that Swiggy can do?
Yeah.
So if you see the food delivery business, quarter-on-quarter, it is having a 10% growth rate, which is mind-blowing because in India, that means ordering a lot.
Like I used to order like once a week. Now I'm ordering once every 2 days.
Yeah. 2 times in a day is like common for me right now. Whether it is Starbucks or whether it is something else, we keep ordering something or the other. And the ticket size is going up.
Correct.
Right? And that is becoming like a habit. And if you see 10% quarter-on-quarter growth is massive. Right? And if you look at the quick commerce, this is something nobody expected.
Yeah.
See the growth. In quarter 1, 2024, they were at 384 crores revenue. Now they are at 942 crores in just 5 quarters. That means it has gone up 3x in 5 quarters revenue.
5 quarters means one month.
1 year, 3 months. 1 year, 3 months. It's gone up
3x.
almost 3x. Yeah.
So that is the Blinkit business.
That's the Blinkit business.
Wow.
And if you look at the difference between food delivery and quick commerce, they are almost 40% of the food delivery business.
So it's going to overtake that.
It will eventually overtake. So can you imagine a food delivery company will not be food delivery anymore because the main business will be coming from mini Zomato or mini Amazon.
Yeah.
Right? Which is the quick commerce.
Yeah.
And this revenue is becoming more and more right now.
Yeah.
Right? Going out is something that they're still experimenting. I think this is where the new district is coming out.
That will be under this.
Yes. And Swiggy also has something similar in Dine Out, right? You go to Dine Out, you use that extra thing. Swiggy gets a cut from that.
Yeah.
B2B supplies, again, is that hyper pure, which they supply to the restaurants.
Basically supplying raw materials to their restaurant partners.
But they're not very profitable on this. So I would like to even look at the EBITDA in the next one, right?
Okay.
Which is where are they getting the profit from? This profitability growth. Now, again, if you look at the last 5 quarters, you will see that food delivery business is profitable, right? Properly profitable on an EBITDA level.
Oh yeah, the second one, adjusted EBITDA.
Yes. So adjusted EBITDA, where you see all the profit coming in, which is great. Now, the funny thing here is the quick commerce business. They were at minus 133 crores in the last 5 quarters, and now they are at minus 3 crores.
So that is going to create another...
This is going to create another profitable engine, right? And I won't be surprised if Dipinder comes next quarter and says, guys, we are EBITDA positive on Blinkit, and that will make the share price go up again.
And I don't think any quick commerce business in India has become positive.
Not yet.
Like even Zepto is at minus 2,000, 3,000 crores.
Yes.
How are they doing it?
Now, I'll tell you what. It is easier for Swiggy and Zomato to become profitable compared to Zepto.
Why?
Because Swiggy, Zomato have the same infrastructure where that guy will also deliver food and also deliver batteries and, Harpic or whatever, right? Swiggy has the same infrastructure and their additional sources. For Zepto, it is just one infrastructure, which is just this, right? He doesn't have the food sharing thing.
Yeah.
So here, food sharing, both are profitable on. So now they have to figure out how to use the existing leverage infrastructure to get all of this. So always Swiggy, Zomato will win.
All right. So now the $1 million question.
Yeah.
I don't know how much I'm going to invest. Whatever it is. Can Swiggy turn profitable?
I think the answer is definitely yes, but not immediately.
Okay.
Same if I look at Zomato, they were also negative. This guy is also negative. This guy is minus 2,000 crore negative. By the time you come out with an IPO, he will be even slightly better. He might be minus 1,800 crores, but he'll still be minus. He's not going to turn profitable.
But like why will that IPO help him to lower his losses?
See, before IPO, they always reduce their cost. They look at their entire profit and loss statement and they'll be like, where can we cut cost? Where now we have to go towards profitability.
Okay.
If he's negative, he will not get the premium he wants from the market. And the founder is now going to keep his shares. The VCs will exit. Now it is the founder's game.
Yeah.
And he wants to grow his market cap. He wants to come close to Zomato.
Yeah.
He will become profitable. Eventually, it is an inevitable game. But how many quarters will it take? That's the question.
But the founder, does he have enough significant stake in the company still?
It is more about the face also for the founder. For example, Zomato, I think when Dipinder came out, he had 5%, 4.86 or something when he came out, right?
Yeah.
And then he said that if I do well, I want more equity out as ESOPs. So he was growing that. But for him, it was about his face rather than... Because VCs exit. Nobody knows how much they've made.
Correct.
But at the end of the day, we look at Zomato and we look at the founder. In Swiggy's case, we don't know the founder as such. He's not come out and I think there are multiple founders there.
Yeah.
But you will soon see them coming on podcasts and everywhere else.
We'll
right?
call them.
They'll come.
Yeah.
We should call them. They will come. So yes, Swiggy will turn profitable. Not immediately, but will have a similar path to Zomato. It is now only on operational excellency.
So what are the growth triggers for Swiggy?
I think definitely Q-commerce is the biggest growth trigger, right? As we have seen with Zomato, 3x in 5 quarters revenue growth is mad, and EBITDA has also gone down quite well.
Yeah.
Swiggy just has to replicate this. increase their AOV,
Yeah.
then they will definitely win. That is number one, right? Second, cost management, which they're already starting to optimize. They have to optimize much more from an operational excellency perspective. I think these two things, if they focus on, increase AOV, make the Q-commerce EBITDA positive, and ensure that the cost is minimized, I think they will start winning.
How big do you think is this quick commerce market? Like if I
think
look
it's
at India at its
huge.
peak, how big can it be?
See, I look at this in a different way. I look at Amazon. How big is Amazon in India?
How big is it?
Huge. Like it'll be billions and billions of dollars of transactions happening with Amazon, right?
So
Now,
all of that can get disrupted by
can
quick
get
commerce.
disrupted because see, now I saw that on Blinkit I could buy fans. Right? You can buy higher ticket purchases. Now, would you want something in 10 minutes or would you want 3 days later washing machine delivery?
I want in 10 minutes.
I want in 10 minutes as well. So that is why Amazon is actually getting very worried because think about it. I am not going to Amazon and ordering from Amazon Fresh, or I'm not going to Amazon and ordering batteries and all, which would come maybe in the evening. I'm ordering that from these
I want within 10 minutes.
Yes.
In Bangalore, though, it's very fast. 3 minutes on all I've seen.
See, that and all, that's too much, right? But it's
Yeah.
crazy. You never knew you wanted 3 minutes.
Yeah.
And think about this. Both Swiggy and Zomato, as we saw, had $1 billion gross average value, right?
Yeah.
Now that's $1 billion each. So let's say Zepto has 500 million. That's $2.5 billion that is not being transacted on Amazon. Or else we didn't have an option before. Go to Amazon or go walk to a store.
And the total commerce
Yeah.
that happens in India is hundreds of billions of dollars.
Hundreds of billions.
So all of that can eventually come here.
Exactly. There are still so many things that I don't find. Like if I want a protein shake, I still have to order from
I
there.
think eventually everything will come.
Everything will come.
Yeah.
So that is where I feel the game is huge.
Right.
And food delivery will stall after a point. Like I feel eventually Swiggy, Zomato will have to get into their own cloud kitchens which they stopped.
Yeah.
But I think Zepto and the Q-commerce will fly.
Yeah. Yeah. I think food delivery is also limited by your income status. Right? Not everybody will like to order food every
Always.
day.
Yeah.
But essentials, groceries and all, every day you want to order.
Yes.
So it doesn't matter how
Yes.
rich or poor you are.
Imagine
You still wanna
both now
order.
being ordered, and I can go watch a movie now on the same platform. I can order the tickets. Now that's what's coming out next, right?
Yeah.
So he's capturing basically, now Book My Show supremacy will go.
He's already a billionaire. No?
Yes.
So, cool. So now you tell me, obviously the IPO is coming.
Yeah.
But there are some hidden hacks, right?
Yeah.
Of investing in companies before they go IPO.
Yes.
Is it possible with Swiggy?
So that is where you invest in the unlisted market. Now there are proper risks when you invest in unlisted market. For example, you cannot immediately exit when the IPO comes out. You have a lock-in period of 6 months, right? Sometimes the average ticket value is not exactly the same. So some platforms give you the option of investing with 10,000, 20,000. In case of Swiggy, I think one lot itself is 5 lakhs and you can't exit on listing day. So if it falls down by 50%, you're locked for 6 months, right? But there are platforms like, for example, there's Precise by Leadoff, there is Incred, there's Unlisted Card. So there are multiple platforms with different lot sizes, but also please understand, they're not giving you at face value. They will give you at premium value. So they buy it at X amount and they will give you X plus something to you, right? Because they're not going to be transparent like an NSE, BSE. That's the thing that they have. So for people who want to invest before, there is a high risk. Because I feel it is not profitable and there is a chance that listing will happen, gain will happen. But immediately after the gain, I think there will be a small, in my opinion, there might be a small correction. And if that happens, then if you have invested in the unlisted market, you are at high risk. Because 6 months, if it goes down like Zomato, like 73%, you're finished.
So now that we've talked about the business models of Swiggy, Zomato, and how Swiggy can become like Zomato.
Yeah.
But obviously every investment has its risk.
Yeah.
And it's very important to understand that before getting into an IPO.
Yeah.
So can you just educate us as to what is the worst that can happen? How can shit hit the fan with our Swiggy IPO investment?
Got it. So let me tell you this, right? See, Zomato won because of operational excellency, purely because of
Execution.
Execution was key. Nothing changed dynamically, right? Both food delivery market is growing, everything's growing. But if you look at the antithesis of, we call it antithesis of Swiggy, right? One is their execution has to be on point, right? As we mentioned before. Second is, I've heard that now a lot of competition is coming in the quick commerce business.
Oh, really?
Yes. Amazon is entering it. They finally realized that, oh shit, this is going to become a problem.
For Amazon India, right?
Amazon India, because he is catering to this market. So Amazon's coming up. I think Tata is now going full quick commerce instead of having BB Daily was there, but now they're going full quick commerce. So and Jio is coming out with their JioMart.
They're always
They apparently
big
failed,
daddies.
but they're now coming back again. So if these
they failed with the
JioMart only. They tried JioMart. It didn't work out
also
well.
Dunzo, no?
Dunzo is they're not going ahead with Dunzo.
That
they
also,
should have, in my opinion, but they're not investing more into Dunzo. They're taking it as a loss. But if more competition comes in, the thing starts getting split.
What about Flipkart? Flipkart is not doing anything.
Flipkart started minutes.
Oh.
In fact, there's a fun report that came out on UBS. It was called Evidence Lab by UBS, which showed that Flipkart versus Zomato. Flipkart, all the same products. If I'm ordering a cup, let's say Nescafe bottle, right? It is 10% cheaper on Flipkart compared to Zomato.
Oh, they figured out the supply chain better.
Either they figured out supply chain better, or the commissions are lower in Flipkart compared to this, or they're doing a new market pricing where everyone now, like me and you are talking, is see it's 10% cheaper in India. That works a lot.
They're burning money.
Yes, eventually they'll come back up to it. But everyone is now entering the quick commerce game. So that is going to be one of the biggest problems. And I feel this one new problem is going to come very soon, which is regulation. You know,
regulation will come in quick commerce.
I feel it has to come, not just quick commerce. I think food and quick commerce will come. Because every time an industry does well in India,
regulators come.
One tax will come somewhere or the other, something will come, right? We saw that with every industry. Fintech though literally died because of this. And I think food delivery has not had that problem. And now if they start taxing heavier on eating out or, you know, going out or whatever, which anyway were taxed a lot, I think that will start becoming an issue.
Cool. So final verdict, Shashank?
Final verdict, me personally, I would wait after the IPO to invest.
After the
IPO, let it fall. See, because I'll apply for the allotment, listing gains you will get 80% you should get listing gains, but everyone's going to apply for it. So I can try it, but I don't think I will get it. But even if I do get it, I will immediately exit and I will wait until it falls down because next quarter will be negative and then I will start buying it again. When I see that positive trajectory happening, that's when I take a bet.
All right, Shashank, thank you so much for breaking this down to me like I'm a 10-year-old kid. Thank you guys for watching till the end. And I hope this was as informative and fun for you as possible. We try to simplify stock market investing. And if you have any ideas as to what we should do next, drop it down in the comment section below. And if you want to learn it in depth in a live session with Shashank, check out his masterclass below. He conducts it every Saturday. The link to join that masterclass is also put down below. All right, guys. Until then, we'll see you in the next one.